Welcome back, everybody, to another episode of Bullish or Bearish. My name is Tony Chu from Success Options Group, and I'm here with my sister Angela, who you'll see in a couple of seconds. But we're here to bring you another episode where we hit those financial topics that you're really interested in. We just make it simpler, and we make it something that you can understand in this bite-sized video that we're doing.
So really what we're getting at is we're going to give you both sides of both points of view, actually, like both sides of the story, so that you can actually get a full picture and actually make a decision that actually works for you and is not generic. So let's get right into it. What is our topic for today? Our topic for today is going to be called buying the dip. Now, what the heck do I mean by buying the dip? Well, okay, we're talking about stocks. And everybody knows that in order to make money in the stock market, you have to buy low and sell high. Well, how do you buy low? Well, you have to watch the chart and watch how the stock market dips, right? And then you buy the dip. And then that way, when the stock market goes back up, you can sell it at the high. So you need to be able to buy the dip.
Okay, so let's start right there, right? So you're saying buying the dip, which is a very optimistic point of view. I would call that catching a falling knife. Because how do you know where the bottom is, right? So there's two sides of that coin, right? You have to buy the dip. I would say more catching that knife.
Okay, so I know what you're saying, like finding the exact bottom. Yes, that's like fortune telling. Like nobody can actually predict what the actual exact bottom is. But you can actually, if you know what you're doing and you have education, and you've learned how to read these charts, you can tell when it's fluctuating, when it looks like, oh, it should be about the bottom. Not only that, there's actually a lot of different strategies where you can actually average it out so that at least you won't be buying at a high point.
Okay, so that's what you're talking about, cost averaging, right? That's the buzzword that's associated with that. And this is what I have against that, is that it's kind of like this mindless kind of analysis that people have. Like, well, just keep buying, and you just buy it on some frequency, some set frequency. Whereas, we talk about in our workshops, we talk about in the coaching sessions, there are technical analysis. There's little indicators that you can see. So you can either use technical analysis or you can use fundamental analysis, right? So you can see where have we broken from the historical norm, or where is it an undervalued kind of stock or ETF, whatever it is. And that's the problem I have with this cost averaging, is that it's kind of a brainless, I'll just buy it every 2 weeks kind of concept.
Okay, so yes, that is how some people do cost averaging. That is not what I'm actually trying to get at. What I'm trying to get at is, after you've gotten the education, if you've attended one of our workshops, especially if it's one of our stock workshops, is that there are fundamental things that you need to know about chart reading. But once you know those fundamental things, then you can say, okay, when I say cost averaging, I mean you buy it at where you think, because of your knowledge and your technical analysis, that it should be near the bottom. And when I say cost average, I mean you watch it, and if it keeps falling, you can buy it again to lower the price, lower the overall average price of the stocks that you own. But this is really a method for people who are going to buy something that they're planning to hold long term. Okay, I'm not saying that you should do this if you're just going to do just a turnaround, like a 2-week turnaround or a month turnaround. This is for people who are really interested in holding it for a long term gain.
So I mean, what you see in social media, you see in videos, YouTube videos, right? You just buy the dip, right? It's just like a common mantra, however you want to say it, right? Just buy the dip, and because it's on sale, because it just crashed quite a bit, right? And I don't know about you, but I like a good sale, like most of us do, like buying things at a discount. But then it sucks if you're a couple of days later, it's even cheaper. There's another sale, it's even a better sale, right? And that's what that mentality of the buy the dip is often. Is just anytime it dips down, just go for it, right? Just buy more, right? And you leave yourself without that kind of cash reserve, or that kind of extra, I don't know how to describe it, the extra powder in the, to go and take advantage of those kind of sales and those kind of opportunities.
So that's the one thing that you do have to keep aware of, because even if you're going to do cost averaging, you also have to know when to take profit. so that you can recoup the money that you've spent. Do you see what I'm saying? So yes, I understand where you're coming from, but when they say buy the dip, they don't like, okay, yes, a lot of people don't know what they're doing. So they just say, oh, just buy it every time it drops. No, like if you know what you're doing, when you're buying the dip, at least from the way I define it, is that you're actually already seeing the fact that it's about to reverse. Like you're actually seeing all the indicators that you can learn from actually like doing one of our programs. The indicators is show you that, oh, it's about to reverse. It has gone down probably as low as it's going to go. And you actually have seen like signs where it's actually probably like you have a good chance that it's going to go back up. That's a good time to buy. And then if it goes back down, okay, well, that happens sometimes. But you just, it's not like you always buy it all the time. It's like when you see signs that say that, hey, okay, yes, it's low, but there are signs that it's going to go like the opposite way. That's when you buy the dip. It's not every single time, all the time.
And I guess this is where my main point comes into is like, it's not necessarily about cost averaging or buying the dip. It's about a trading strategy, right? So you're going to, like I said before, it's like most people, they say buy the dip. I say catch the falling knife, because you can imagine, you can visualize this knife falling. You just like, well, I don't want to stick my hand out to grab that, right? And that's really where it comes down to, is like, I don't want to use all of my cash. I don't want to use all my reserves. So I'm going to do a strategy where I am like getting in slowly. So I'm not going all or nothing, right? It's like a strategy to like get partial positions, right? And just keep, not necessarily, let's say, cost averaging, but it's like using those technical and those fundamental indicators to make money, right? To get me my portfolio.
Okay. So I think what's really happening right now is that we're both talking about very similar things. It's that you don't like the term, like, buying the dip. And you know what? I totally get that, because a lot of people use it wrong. Because even when I'm using the term buying the dip, I'm not talking about throwing all your money like in like a lotto gamble. I'm still thinking, you have to have a plan, you have to have a strategy, you have to know like when you're going in, how much profit you're planning to make, and how to get out. These are all basics in my head. So when I say buying the dip, I mean, you always want to try to buy when the stock is lower so that you can sell when the stock is higher. That's like the basic common sense that we all should know and should do. You wouldn't believe how many people like do the opposite somehow. Somehow they buy the stock when it's high and sell when it's low because of fear and greed. So, I mean, it's about taking those out and like actually using knowledge and things that you've learned to actually know when to get in and when to get out.
And we've talked about this in prior videos, right? Even with gold, real estate, as an investor, you make your money when you buy it at the right price or you buy low, right? And that's where you make your biggest investment gains, is when you buy it at that discounted price, right? Whether it's whatever it is, it could be real estate too, right? And that's where my biggest part of this is like, it's not just that any stock that falls or that crashes, right? Oh, I'm going to buy it because it's cheap as heck right now, right? No, right? You need to have some plan. You have to have some reason to get into this investment to begin with, right? So make sure you hit the like and subscribe. If you enjoyed this video, leave some comments. Angela, if you have any other final thoughts.
I mean, seriously, you can always give us a call, like set up one of our, set up for one of our meetings, or even come to one of our workshops, because this is a great time for everybody to like learn a little bit, because learning a little bit can help you a lot in the future.